Hello and welcome to the Steps to Investing YouTube channel. My name is Simon and today we're talking about what it's like to be a fund manager, and we're very privileged to be joined by a fund manager in the room. So we'll come to that in a second. Just before we do, just to start off, I should say that today we're probably talking about some investments, and if we do, then that is not a recommendation to buy, sell or hold a particular investment. And of course, you should remember that all investing comes with some risk, so the value of your investment can change over time, go up as well as down. That said, let's go straight into it and meet our fund manager, James de Bunsen. Welcome to the show. James, you manage something called Henderson Alternative Strategies Trust, which is an investment trust. We'll talk about that a bit more in a second, but can you just tell us a little bit about what it's like to be a fund manager? What is your job, really?
Well, I don't want to make it sound too boring, but it really is about managing risk. So all funds have an objective and a defined universe, really. So investors know what they're getting. And our job is to look at that universe, find the most promising investments in that universe, and then, really then do the due diligence on whether those investments are as promising as they look. Once we've found those investments, it's then about blending it into a portfolio that has those sort of characteristics that we've told investors that they should expect. So that's creating the portfolio that is robust and hopefully has the potential to achieve the goals that we're setting out to achieve.
And that comes from the investment objective. So Henderson Alternative Strategy, should we call it HAST, just to shorten it, HAST, has a specific objective that it's trying to achieve, that's right?
Yes, we're trying to outperform global equities over the long term. But curiously enough, we're not actually generally investing in equities. What we're actually investing in is alternative assets and strategies. So that might be things like private equity, which is a little bit different to normal equity markets, public equity markets, hedge funds, property investments, specialist areas of credit, commodities, that sort of thing. But that you don't typically have a sort of benchmark for those types of alternative investments. So we've just said to investors, we're going to try and outperform equities, which is something that most investors understand, what sort of risks and return characteristics equities have. But we're going to try and outperform them over the longer term. Okay.
So what's a typical day like? What does fund management day to day look like?
Yeah, I mean, it is quite varied, but typically we start the day with a team meeting. I sit on the multi-asset desk at Henderson, Janus Henderson. There's about 10 of us. We sit down first thing in the morning and we discuss what's going on in the world in terms of the macroeconomic background, the political background is very important at the moment, and what's going on in markets. Then we'll go back to our desks, we'll check our portfolios look sensible. Is there anything we need to do because of what's happening in markets? Then we tend to have, the way we invest tends to be fund of funds. So we invest in other people's funds. So we every day probably see 2 or 3 fund managers come in. Might be existing investments or they might be prospective investments. So that usually takes up 2 or 3 hours. And then the rest of the day is predominantly done just research, reading around, what we're investing in.
Let's go back to that fund of fund idea, because it's slightly unusual perhaps in the way that an investment trust is run. There aren't many that do that. Why is it done in that way? Why don't you just invest directly in the things that you're talking about?
Well, I think it's because we know our limits and we're not experts in all of those areas. What we try and do is outsource it to the best private equity managers, the best hedge fund managers, the best property managers. So, our skills really are assessing whether those fund managers are good at what they're doing, whether the assets that they're investing in are high quality and are right for the economic background at the moment, and then blending it all together. But yeah, we don't have this, we're sort of jacks of all trade, master of none in a way, apart from multi-asset investing.
Picking fund managers, yeah. And how did you get into it in the first place? What's your background?
A bit convoluted. I had absolutely no idea what to do after I graduated. My degree was in ancient history and archaeology, so not typical for fund managers or people in the city. I worked in music production for a bit. I worked as a journalist for a bit. But then I realised that I probably needed to get a career that maybe had sort of more legs, and actually paid a bit better. and I did an exam, the IMC, Investment Management Certificate, while I was still a journalist. Managed to get a job at a fund management group, writing their sort of internal, their communications, writing actually commentaries for fund managers. And a team that I was working with there offered me a job on their desk. And I had to do some more exams, but yeah, so I mean, I spent about 10 years outside the city before I came and worked.
I was going to ask you about that because it is quite, not only is it quite a regulated industry, but also the sort of burden of learning is quite steep when you start out.
Yes, and it was a real shock to me having to do some pretty hardcore exams when I was in my early 30s, already had 2 children. In a way, actually, it was a good time to be doing lots of hard work at the weekends because it meant that I didn't have to look after 2 young children. My wife wasn't so pleased about it. But yeah, I mean, it was very tough. But, I was massively incentivized to get through those exams because I felt that, I had a sort of, my peers had a 10-year at least head start on me.
So let's go back then to the trust that you manage, Henderson Alternative Strategies. How do you make that assessment about a manager? Do you have a process, or is it more about gut feeling? What's the thinking that you go through?
Yeah, I mean, we definitely have a process. I think over the years it feels a bit more gut instinct, but it's very regimented in a way, in terms of looking at their experience, whether the company they work for has the resources, whether they have the backing to do what they purport to do. Just finding out what their motivation is, and then really doing a deep dive on the actual assets that they're investing in. But yeah, it's fairly process driven. And that tends to be a blend of qualitative assessment, so asking lots of questions, but also the quantitative side, which is crunching the numbers.
Yeah. And when you're meeting these the managers and looking at the assets, is there a point where you kind of go headlong into that, or when you're buying stuff, do you buy a little bit and buy a bit more? How does that work?
Yeah, I think if it's an asset class which is quite market sensitive. So what I mean is something like an equity fund, a lot of it's about timing. So, and we tend to have a little bit of a value bias, so we like buying things when they're cheap.
Right, okay.
I find it quite difficult to buy something that's just gone up and up and up. And even though the long-term story might be good, I worry that, there's too much in the price already. So what we tend to do is try and buy things that other people don't like, but we think that they're overstating the risks out there. So, for example, at the moment, we're looking at UK domestic companies because everyone's very worried about Brexit, and obviously there is a lot of uncertainty around that. But we think those fears are overdone, and there are some very good companies out there that have been thrown out with the bathwater. So with something like that, we will sort of tiptoe in because we don't know when other people will come round to our way of thinking. But then if we invest in a hedge fund, you're essentially outsourcing, the management of those assets to someone else, and timing isn't quite so important. So we'll probably just go in with our kind of full weight of how much we want to own in that case.
And do you hold things for a long time? What's your sort of holding period?
We like to, because we like to give people time to do what they say they're going to do and what we're hoping they're going to do. Yeah. There are some more tactical investments we do, which, maybe the UK domestics stocks that we're looking at might be more tactical. You might see a massive bounce if, we either go down, the road that looks like it's going to be a much softer Brexit or even, another referendum. Then I think you'd see those things bounce quite quickly, and then maybe we might just take the money off the table. Okay.
Now, you mentioned risk right at the top of the programme. How do you assess risk, and how would you define, if somebody was buying Henderson Alternative Strategies, how would you define the risk that they're sort of laying themselves in for?
Yeah. Well, I think our benchmark is a decent guide. We're trying to outperform global equities, and that will mean that we'll, because what we're doing is actually very different to global equities, we will differ a lot over short-term periods, but we think we can outperform global equities over long term. But in risk terms, I think it's a reasonable metric. So if people look at the history of the stock market, over 100 years of history, you'll see that they've done about 8% annualized over that time, with a volatility or standard deviation. Sorry, it's another jargony term, but that's the sort of moves you'd expect to see in a normal course of events. So the volatility of about 15% perhaps. We're actually trying to do what we're doing with a little less risk, right, because we have this inherent diversification within the portfolio.
I was going to ask you about diversification, because that's one way of sort of spreading risk, I suppose. And clearly, amongst all of those different types of alternative assets, there must be a very diversified portfolio at some level.
Yeah, I think that's one of the really great things about the trust, is that we can buy things which have a lot of risk, or in certain ways of looking at risk. And then blend them with much more defensive assets. At the moment we're sort of looking at hedge fund managers who actually have great track record of doing well when markets are falling. It's a rare skill. There aren't too many of them out there, and sometimes they lose a lot of money in normal times, and then make a little bit of money when markets are going south, which is not what we like. But there are managers out there who just their performance comes to life when there's a market sell-off. And it's blending those higher risk strategies with lower risk people like that you then get a lower risk portfolio overall. Which gives you a smoother journey.
Okay. And we talked a bit about buying and the process you go through. What about selling? That's a real hard discipline, isn't it?
Yeah, yes, it's quite easy just to become, a little too wedded to certain investments and certain fund managers, because obviously, fund managers, the one thing they have in common is they're usually quite good at selling themselves, selling their strategy. They're articulate and always have good reasons why perhaps they're not performing well. So whenever you see a fund manager, you tend to come out of it thinking, I believe, my faith has been rekindled, even if they're doing badly. So I think the hardest sell decisions are fund managers who are going through a tough time, but we've made the call that we think that perhaps there are certain changes in the market backdrop, changes in their company's circumstances, changes in their attitude, which means that we're not going to give them any more time and we'll sell then. The more market sensitive investments we have, it's more making a judgment about, is the market dynamic changing? Have you made enough money? You need to leave a little bit of money on the table for someone else to come along and sort of buy those assets from you. So yeah, it's a blend of things. But I think the easy sell decisions are when you've made good money and it's time to recycle those funds into something else. It's harder when a manager is struggling and you make a call that you don't think that they're going to get their mojo back.
And how do you keep emotion out of it, or do you keep emotion out of it? Is it an emotional decision?
It's hard. It's always hard to keep emotion out of it, because if you've made an investment decision, you have to admit that you're wrong sometimes. I think what's good is working with my co-manager Pete Webster. We're similar in many ways, but everything that goes in and out or out of the portfolio has to be a consensual decision.
Right.
And Pete has a different way of looking at things than I do, and I may say, let's give this person a bit more time, and he'll go, no, enough. He's usually a bit harder on those things than I am, but yeah. So I think that's a good way of, if it was just me, the emotional side of it would probably play a bigger part, but with two of you, I think that helps control that side of it.
So James, final question, mm-hmm. What's the best thing about your job?
I just think it's endlessly fascinating. We're looking at new investments, new types of investment every day. I mean, the mandate that I have with HAST, we're looking at alternative and differentiated strategies. Some of these investment strategies are new to me, and I've been in the industry for a while now. So every day I'm learning new things. When I was a journalist, it was fascinating. I wanted to write about current affairs, never got that chance. Working in trade magazines, but now I have to be on top of everything that's going on in the world, geopolitics, as well as the economy, and then talking to different fund managers every day, getting into the nitty-gritty of what they're doing. It's just endlessly fascinating.
James, thank you, and thank you very much for your time. Speaking of endlessly fascinating, it has been today. I think we've all learnt a lot. Thank you very much. Well, that's all we have time for today. Thank you very much for watching. If you want to see more, then subscribe to the channel, and of course all the old episodes are there too, so you can check them out on the YouTube channel. Many thanks, and see you again next time.